Hello everybody. Welcome back for another video. Hope you're all doing fantastic and that you're all having an incredible day. Leaving a like, a comment, or subscribing helps out the channel immensely. A very big thank you to everyone who leaves a comment every single day. Welcome back to another News I Missed, where I go over, that's right, news I missed. And without further ado, let's jump right into it. The Terra Classic community has passed proposal 5234 on Monday after a week of voting and debating. Notably, the proposer, a community member known as Akujiro, that is Akujiro, confirmed the development in a tweet yesterday. There's the tweet for it right there. It says, "We are decentralized. I encourage everyone to start discussions and take action." Luna Classic developer Alex Forshaw, giving details about how the vote went, revealed that the proposal attracted about 83% of community participation, even without 53 or 58% of the network's 85 validators. Notably, about 92% of non-abstainers, who writes like that, voted for the proposal. And there's another tweet for it right there. So apparently, there was a vote that took place. If you remember, I'm pretty sure you do, we had information about a month and a half ago, maybe 2 months, time is flying by really, really fast, that there was a proposal to begin to destroy and or burn an enormous amount of Terra Luna Classic. The idea being is that it has a very high circulating supply, and in an effort to raise the coin's price or raise awareness of the coin or get the coin's ecosystem back up and going, there was a proposed tax of 1.2% that would be put on every single transaction. We then subsequently also had news that Binance and Kraken question mark? I don't know. A bunch of other cryptocurrency exchanges agreed to said coin burn, in that transactions either going in or going out, or depending on how, dedicated they were, even transactions happening within the cryptocurrency exchange, or also on-chain transactions, would burn 1.2% of the Terra Luna that was being transferred back and forth. The new proposal, it seems, has actually lowered that amount of 1.2% to 0.2%, because apparently I think a lot of people may not have been as open to the idea of lowering their Terra Luna Classic or burning it, or I don't know exactly what was going on. Tying directly into that news, it says Binance burns 2.5 billion, with a B, Terra Classic tokens as community lowers the burn tax. Yes, Binance crypto news is in the news every single day. When it has to do with Shiba Inu or Terra Luna Classic, they're always even more so in the news about how many coins were actually burned. It's just simply a thing that keeps happening every single day. I assume that at some point people would have not stopped caring about this kind of news, but it's everywhere, every single day. So the new tax burn is now 0.2% from the 1.2% where it was just a couple of days ago. I believe that another portion of this new tax burn, the lowering of the tax burn, is going to be allocating a certain percentage. Is it 10%? I don't know. 10% of the 0.2% to actual development on the chain, which makes a lot more sense as opposed to simply just destroying these coins. If you take a portion of the coins and give them to people who want to develop on the chain, because a huge problem. This was a major problem before crypto became like mainstream where it currently is. One of the biggest problems that a lot of developers and cryptocurrency projects had was actual funding. I know it sounds weird now. You would never assume that anything launching would have any problem getting a couple $1 million. But a number of years ago, I think even, what were the coins? I don't remember which coins it was. Basically, there were a number of projects who were like, hey, do you guys want to donate to the project, and of course no one donated because that's not how human beings work. And a lot of these projects 3 months later were like, hey guys, we have to shut down the coin because we have no money. They were doing it out of the kindness, like literally. There were tons of developers who were developing these projects and these blockchains out of the kindness of their heart. They a lot of times didn't even hold any coins. They wanted to make sure that they, were involved in the project but couldn't benefit from it properly themselves. So they were asking for donations to be able to, in their free time, build up these coins. Long story short, a lot of coins disappeared, and this is why we have proposals like this happening now, or that you see so much money entering into the space to make sure that the actual developers, because people forget about them, the people who are actually keeping the chain safe, they also need money too. They might do it out of the kindness of their heart, but their bank account is still, dwindling as they have to pay rent or their mortgage or whatever else there might be. So the news is Terra Luna Classic has a brand new burn. It's not 1.2%, it is 0.2%. Binance has also agreed to lower the tax on their website as well. I assume everyone else has followed suit. They just recently burned 2.5 billion tokens. A lot of people, from what I read as I go through the news, seem to be quite optimistic in that as Binance is burning 2.5 billion during a bear market, people are expecting hundreds of billions of coins to be burned in the coming months, years, with an S at the end, as we see more traction on every cryptocurrency exchange as prices eventually go back up. That's the Binance Terra Luna Classic burn 0.2% token burn coin community news. And yeah, let's move on. Also in the news, the crypto market is suffering from a bleak economic outlook. That's a bit intense. However, according to a recent survey from the Bank of America Corporation, the crypto market may have just bottomed. Does this sound familiar? Yes, it does. We've been talking about that especially last week. Every single day, it was either a rich person or a company or an institution, or someone else rich. Every single day, everyone believes, whether this is true, we do not know, but they all keep stating that they believe that the cryptocurrency market and the stock market have basically bottomed. They are at the lowest point. They may go a bit lower, but we will not, or they believe that we will not be seeing any more movements to like an $11,000 or $12,000 Bitcoin. I was reading an article before about the stock market aspect of it, as there's far more news and far more analysis for it. And people were saying that based off of any negative news that we keep getting, the stock market may fall by 0.5% or 1%, but there's no longer these like 8% over the course of a week dropping moments. So they think that people who wanted to sell have kind of exhausted. Same exact thing for crypto. We usually see the hyper levels of capitulation that we normally see in crypto whenever there is a bear market or a downtrend or things are going down. Everyone who wants to sell ends up selling. And at that point, all that's left are the buyers, the people who believe in the long-term aspects or price proposition of said coins. And they're the ones who usually end up profiting as markets go back up. The survey, which included various hedge fund managers, revealed that a strong equity rally can start in early 2023. Therefore, it could be the best time to invest in crypto again. According to Bloomberg, the survey believes that the stock market has achieved full capitulation. Other strategists believe that the bottom can be reached in the early parts of 2023. Once again, for those of you who missed that news around August, September, when we got news that the Federal Reserve was thinking about raising interest rates once again, and then they ended up doing it, and then we would potentially have news sometime in November of another interest rate rise. A lot of analysts and myself, after hearing what they had to say, was telling all of you that they believe, or a lot of people think, that the next interest rate rise, which is expected on the 1st or the 2nd of November, is either going to be the last or the second to last. The idea being is that they know that mathematically they cannot have a 19% interest rate. They have to stop raising it at some point. The rest of the world is completely collapsing economically because of the movements of the Fed. And the idea kind of is You either stop raising interest rates or the world goes into a depression. Which one do you choose? So at some point, the pressure will be too much for the Fed. And a lot of people believe, once again, as you see on the screen, and once again from what I was telling you, springtime is kind of the barrier. A lot of people think we're going to have it in November. There might be another rate hike sometime in January, potentially in March. That's if things get really, really intense. But they're going to have to go back to their old economic policy of buying equities, of buying stocks, and of buying back other things on the stock market. And at that point, we all go parabolic because everyone's waiting for it. And a lot of people who entered the markets over the last 2 years, seeing that everything was rallying, have basically sold off all their stuff, except for all of you kind people who are still inside of the market. Bank of America's chief U.S. strategist believes that the survey strongly signals full macro capitulation, investor capitulation, and the start of policy capitulation. It's nice to have optimistic news, I won't lie, despite wherever prices are. I'm telling you, I can't be the only one. There's something in the air. I can feel the greed from everyone. Everyone's expecting prices to go higher to make more money. And it's just really a matter of time. Regardless of what the time frame might be, this isn't me, using my magical X-Men powers. Prices will go back up. It's just how things have always been. We've been through worse things before. We've been through longer bear markets. We've been through stock market crashes that have devastated the entirety of the economy. It took about a year and a half, 2 years, and then people forgot about it. People may still whisper about 2008, 2009, but people started making money once again. So yeah, the general idea, at least from what we're getting from stock market analysts and also crypto analysts, is that things might go down a bit more, but as far as like actual collapsing of prices, that seems to be behind us. That's the Bank of America Corporation crypto market, stock market outlook, prices potentially rallying in early 2020. That'd be a great present for all of us. That'd be wonderful. If it could start around Christmas, even like Christmas Eve, that'd be great. Anyway, yeah. Let's move on. Also in the news, in very, very popular news, Walmart's global chief technology officer, Suresh Kumar, has tipped cryptocurrency to become a major area of disruption, particularly in how customers pay for virtual and physical goods in the store. Speaking at the Yahoo Finance All Market Summit on the 17th of October, Kumar outlined Walmart's positive stance on digital assets, noting that crypto will become an important part of how customers transact for both physical and virtual goods. He said, "I think that there are three major areas of disruption. Crypto falls in sort of the middle," he said, explaining the way in which customers are getting inspired and discovering products is changing. Kumar also suggested that a significant amount of customers will be marketed to through the metaverse and live streams on social media apps, and that crypto could be an important payment option in these kinds of areas. For those of you who missed it, a couple of months ago, Walmart announced that they have their own metaverse. It's called Walmart Land. I made fun of it for about a good hour and a half because it's called Walmart Land, and it's basically apparently going to have, I think, a Ferris wheel and a Walmart store in it, and you'll be able to go shopping. Why you would want to go shopping in a digital Walmart, I haven't figured that out yet, but they think that that's what's going to happen. So we now have yet another major, gigantic. Walmart is huge. Like, Walmart's not like your run-of-the-mill company. Like, Walmart is gigantimous in size. And they have now officially, in front of all of us, come out in support of cryptocurrencies. In what way? We don't know. I would assume, hear me out here, Walmart is probably going to be making their own coin. I dare not call it a crypto because it will not be decentralized in any sort of way. It will probably be going through their own systems. It may have 5 nodes at different Walmart stores around the US, but that's going to be about it. This will not be a free running coin. I do not think it will be something that you would want to invest in, as I assume it is going to be a stable coin of sorts, but Yeah, there's a lot of talk and discussion about crypto now from these huger players in the game. I assumed for years that they've all been collecting and accumulating crypto. So now it's just a matter of them announcing. Usually the main thing is if Walmart says, "Hey, on Walmart land, you can now use Walmart coin, Tether, Bitcoin, and Ethereum," that's usually an indication to me as to what coins the company is actually holding. Yeah, very, very popular news. A lot of people, I don't know that people were really shocked by this, but I think at this point, once again, put it into perspective of just how many companies are constantly announcing that they're into the cryptocurrency space, what they're doing with crypto, how they're trying to integrate it. And these are the companies who've actually come out to us and said that they're doing all of this, because it just seems completely logical at this point. That's the Walmart is seriously considering making crypto a part of how customers transact news. Yeah. Let's move on. Also in the news, for those of you not looking at the screen, just because it's always in the news, it says 395 million Shiba Inu were burnt in 7 days, 50 million over the course of 24 hours, and 43 million in a single transaction. I don't really know what more to say on this, just being completely honest. This happens all the time. I still question marking how big these coins are actually going to become, especially because keeping in mind all of this is happening during the actual bear market when things are down. So I do wonder, will that be like 5 billion burnt in a day, or, other really crazy numbers? Because these are the numbers on the transactions that are actually happening when prices are very low. So Shiba Inu and Terra Luna Classic are in the news every single day. I don't think there's another big burn coin that's actually happening. We know that Ether is being burned every single day through EIP 1559. But I think it's nothing, there's not 395 million Ether being burned at once. So I think these numbers end up looking a lot more significant than any type of burn that may be happening daily on Ethereum. No, I don't think there's any other coin that's burning as much as these two right now. So very popular. As always, that's the Shiba Inu. Coins continue to be burned. 395 million coins burned in a week. That is kind of crazy. That's 400... 8. That's a lot. All right. That's the Shiba Inu news. I was calculating per week, 4. Anyway, let's move on. Also in the continuing saga of everyone versus the SEC, U.S. Senator John Hickenlooper, that's his name, says it's time for the U.S. SEC to establish rules specifically designed for crypto. In a letter to SEC Chairman Gary Gensler, the senator says that clear and transparent rules create an environment that protects crypto investors while promoting financial innovation within the country. It says, "I want to urge the SEC to issue regulations for digital asset securities through a transparent notice and comment regulatory process. Whatever the risks and benefits of those new assets might be, existing laws and regulations were not designed to deal with how digital assets are being used in the market." For those of you who don't know, the current regulation that the United States Securities and Exchange Commission is trying to put on top of crypto are laws from the 1920s. Yeah, those 1920s, like the ones with horse and buggy, before we had any computers or smartphones or had an idea of even what a television was. So, this is now another person who has come forth in opposition of the U.S. SEC. I wonder, do they care? From a personal and impersonal perspective, does the SEC actually care that so many companies, organizations, for those of you who missed it a day or two ago or whatever time ago, time frames are crazy, Grayscale and Coinbase are now joined together in the lawsuit against the U.S. SEC. No one cares for them. I assume if this is the news, if the news that we're getting annoys us about the SEC, I can assume the people who actually are trying to put millions and billions into this market and not being able to push through because Gary Gensler is in their way are probably a lot more upset. But then I also wonder on the other side, like, does the SEC like personally care? Like, you know how like if you were in high school and like no one liked you, you'd be like, oh gosh, this is terrible. I wish I had friends. The SEC doesn't have any friends, but do they care that they don't have any friends? Are they like that goth kid who kind of like sits by themselves and they know that they're goth and they have no friends, but they're still cool with it? Is that what's going on with them? Because I feel like external pressure at some point will have to push them into doing, it's terrible that I have to say this, will push them to do what's right for the actual cryptocurrency space because they still have not done anything. But the problem that bothers me the most is that the SEC is the only one who's constantly standing up and saying, we need regulation. We got to regulate this space. There's so many unregulated regulations and but they don't. They're the ones who are waiting for it to give the actual regulation. So my only silver lining or hope for the future is that one photo, remember that photo that we got where the Ripple people were standing with the head of the CFTC in their office and they were all smiling like they were happy that the SEC didn't exist. So I just assume that behind the scenes people are working towards that because oh my gosh, it would be a great day, a great year if I never had to say the letters SEC again, because they're constantly going after cryptocurrency projects. People are constantly talking about how terrible they are, or they simply don't do what they have to do. I'm telling you, 2055, that's when the U.S. finally gets regulation. So that's the U.S. Senator John Hickenlooper. It sounds like a name of a movie, Hickenlooper. The Hickenlooper. Oh my gosh, there's John Hickenlooper. See, it sounds like a superhero. Anyway, that's the U.S. Senator talking about the SEC needs to really get it. Just give regulations, dude. Like, I don't understand. Like, what's wrong with these people? Alrighty. Let's move on. Also in the news that people try to make news, but it's not really news. I mean, it is. Anyway, on Tuesday, Deutsche Bank said it is cooperating with authorities investigating a tax fraud case that dates back at least 10 years. The biggest German bank is only one of several institutions embroiled in the Cum-Ex scam that, okay, sure, which involves billions of euros. Though Deutsche wasn't formally identified, the public prosecutor's office in Cologne stated that a raid was performed on a bank and auditing business. The raid happened in Frankfurt and comprised over 100 investigators, geez Louise, and 10 workers had their private dwellings investigated. I'd be upset. That sounds really, really intense. So the reason why I said this isn't really news is because it doesn't really pertain to crypto. But when this news came out, this was everywhere in the cryptocurrency space. Everyone kept on talking about how the bank got raided, how the bank did so-and-so. And I think the takeaway was, this is my side of it, I think people were writing articles or were trying to show how corrupt banks are. Cool, we got that part. But this happens all the time in crypto as well. There are tons of scams. There are also tons of money being missing and tons of things being air quote laundered and things are fraudulent and you know the whole story. So this has nothing, 0% to do with crypto. This news story, like there's nothing, the bank wasn't found to have crypto. They weren't using Bitcoin, Instagram. Like there was nothing. It was simply that the bank got investigated, but this was everywhere. People were talking about this as if this was some revelation that banks do things wrong. Like there's a reason why we have Bitcoin. Bitcoin's not simply there to make you and your family rich. I mean, it might at some point, but the point of Bitcoin is because of corruption in the old system that we're supposed to be getting away from, but we keep integrating into the old system more and more every single day, so it doesn't make a lot of sense anymore. Of course, I can't say I'm not part of the investigation, but it's like, if they did something terrible, would you be surprised? Have you not? You can Google it. Type in like JP Morgan Chase investigation, JP Morgan Chase manipulation, JP Morgan Chase gold and silver market manipulation. You can find all of it. Banks do terrible things all the time. I really do think it was meant to be like a pointing the finger kind of thing from the cryptocurrency space to talk about exactly how bad banks are, but we all knew that. That's the point of Bitcoin. But I think 99% of people have actually forgotten the initial point of why we have Bitcoin. So, yeah. That's the Deutsche Bank is apparently being investigated news. It's not the first time. It won't be the last time. Like, what? Do you know how banks actually work? Like, it's just about them. They don't care about anyone. A lot of the laws that we have, listen, look into your laws in your country. The laws of penalties are usually made by people in the bank who work in high positions in Senate, in Parliament, wherever they might actually be working. There's a reason why. Remember the thing a couple of months ago when people were looking, I think it's Nancy Pelosi. I think that's the one. I don't remember. Who's the person in the United States who always like her stock portfolio is like mint, like, you know, she sells at the right time. She's buying at the right time. I think it's Pelosi. I don't remember. I'm seeing a woman's face in my head. I don't know. Anyway, the entire point is, people were like looking at her stuff. Anyway, no. So okay. The entire point is, people were looking at the penalties for like inside trading from people, I think within Congress. I think that's what it was. And the penalty was like $20. No, I think it was $200 or something like that. So the idea is, if you get caught stealing or inside trading and you make $85 million, your penalty is a couple $100. That's why banks don't usually care. The people who make these laws are usually people who work with or know someone inside the actual bank, like a top head official. So if you get caught, like banks launder money all the time. I'm going to repeat that. Banks launder money all the time. The issue is that when they get caught, if you laundered $1.4 billion, the fine is usually only $3 million. They don't care. They could make $9 million and the $3 million is barely a scratch still. They still made $6 million. This isn't new news. It's just how things are. Anyway, that's the Deutsche Bank news. I'm telling you, look up those things. People are always like, oh, banks are bad? Yeah, that's why we have Bitcoin. All right. I do hope that you've all enjoyed. I do hope that you all continue to have a great day, a great morning, a great afternoon, a great evening. Wherever you are, wherever you might be, I do hope it's absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and or supporting, and I will most certainly be talking to you all soon. See you.